So doctors, I'd like to welcome everyone to this morning's webinar. And David, do want to thank you for your time this morning as well. And we do have quite a bit that we're going to cover off over the next hour or so. David is going to start things off talking about a very hot topic for many of us these days, which is embezzlement within practices. And he'll talk just at a high level about kind of some of the various embezzlement issues and obviously, what many of you can do to mitigate embezzlement within your practices. And then at the second half of the webinar, I will take over and we'll focus a little bit more on the commercial real estate side of managing your practices, from understanding why the lease agreement is relevant to you as a practice owner, how the lease agreement is relevant to the sale and acquisition of the practice, and also some of the various legal terms and conditions commonly found in leases and the inherent risk and liability associated with many of those conditions. And we will also talk about how to renegotiate or negotiate better, more favorable terms with your respective property owners or landlords. Without further ado, David, I'll leave it to you to take over. And doctors, I do want to thank all of you again very much for your time this morning.
Thanks very much, Justin. It's great to be here. My topic today is how to outsmart an embezzler. As Justin said, this is going to be a little bit condensed, and there are some things that if I had an hour or two to talk with you, I would be able to cover that I won't this morning. So we're going to hit the highlights anyway. The first question I guess I should answer is, what makes me Dentistry's embezzlement expert? And the answer is that I'm the CEO of a company called Prosperident. Prosperident does investigate dental office embezzlement, and that's really all we do. And we look at hundreds of these matters each year. I got into the investigation of embezzlement in dental offices completely by accident. I'd like to tell you that I had some kind of business plan or grand design. I didn't. In 1989, I'd left the Army. You can see me there in the nifty green uniform. And I was thinking about what to do next, and I got a phone call from a friend of mine who happened to be a dentist, and he said, I think my front desk person's stealing from me, and I don't have anybody else to call. And that was how it got started. I investigated his matter. We found what she was doing fairly quickly. We got her fired. And I really didn't think anything more of it until 2 weeks later, when I was going into my own dentist's office for an appointment, and I saw the same person that we'd fired at the other office 2 weeks before sitting at my dentist's front desk. By the time I finished his investigation, a couple of his friends had called me, and almost 30 years later, I'm still here. My biggest frustration probably in what I do is that there are a lot of people who will write and speak and even assist dentists who have embezzlement issues without really understanding it. And unfortunately, there's a lot of misinformation out there. It's all delivered to you with the best of intentions, but a lot of it is misguided. And let me give you an example. And here's an article from a good publication, Dentistry IQ, and it's called Top 4 Ways to Prevent. And as soon as I see that word prevent, I know that I'm dealing with somebody who really doesn't understand this issue. Prevent internal theft in your dental practice. And they go on to list some controls, but here's truth. Controls don't prevent embezzlement. I think what everybody does here is they misanalogize. They draw from other parts of their life that they maybe understand a little bit better. And if you're in the audience and you have an alarm system on your house, that's a great misanalogy for embezzlement in a dental practice. When you put an alarm system in your house, it doesn't prevent crime. In other words, if I'm walking down the street, I'm a house burglar, and I choose your house to be my victim, when I get to your front door, if I see the alarm sticker, that does not convert me into an honest person. It simply encourages me to walk down the street and target somebody else. In other words, your alarm system did not prevent burglary. It simply redirected it to your neighbor. And from your perspective, that's a success. From society's perspective, it probably isn't. However, that's where the difference exists between embezzlement and other types of crime like burglary. If I'm a house burglar, I have what's called mobility of victim. In other words, if one target appears to be too difficult, I can move on and rob somebody else instead. Embezzlers don't have that luxury. I've never encountered a thief who is so patient that they will say, well, I'm working for Dr. Smith and it's just far too hard to steal from her, so I will quit my job with Dr. Smith. I will go down the street and get a job with Dr. Jones so that I can embezzle from him. One of the realities of embezzlement is that you and the embezzler are stuck with each other. So if I work for you and my plan is to steal from you, and you block the first and second and third and fourth ways that I think of to steal from you, do I join the church choir and live an honest life? Or do I keep thinking until I come up with way number 5 and 10 and 20? In other words, any control that you put in place will not convert an embezzler into an honest person. All you will have at that point is a frustrated embezzler. And let's talk about an example. One thing that I see written down a lot is that doctors should take the deposit to the bank personally. And please don't take me out of context here. I'm not saying that's bad advice. What I am saying is that if I'm working for you and I've gotten to the point where I've decided that stealing from you is okay, and my first plan is just to take money from the bank deposit, but you frustrate me by keeping control of it yourself on the way to the bank, I'll think of something else. One thing you should know is that we've seen over 300 different ways to embezzle. So it's not likely that as an embezzler in your practice, I'm going to run out of ways to steal anytime soon. Let me just give you some numbers on embezzlement just to set the context. The first is that the average amount stolen from a dentist to the point where the embezzler gets caught is about $109,000. When we talk about lifetime probability, because I get asked this question a lot, one of the things I tell people is we don't know the answer. In other words, I don't know the probability that you will be embezzled in your lifetime. Reported statistics suggest it's about 2/3, 66%, but there are some unknowns here. One of the unknowns is we don't know how often embezzlement goes on and nobody ever catches it. We also don't know how many times an embezzler is caught by a doctor, but it's kind of swept under the carpet and never addressed. So the true number is something higher, but unquantifiably so. Embezzlers fit two profiles. We have people called serial embezzlers. So these are people who steal in one office and get caught and get fired and move on to another office where they do the same thing. In some cases, we've seen embezzlers who have managed to work in 14 to 15 different offices and steal from all of them. I think what it really points to, and this is a great topic for another day, but what it really points to is the laxity to which dentists do background checking. If I had a live audience, I'd ask you to hold up your hands if you enjoyed hiring people. What I can tell you is that probably nobody would put up their hand. You all hate the concept of starting from 50 resumes and getting down to the 4 people you want to interview to the one you want to hire. And when somebody comes along who's good with software, who presents well, who looks like the perfect employee for you, then what happens is every ounce of skepticism that should be in your brain vanishes and you hire that person. And that's exactly what the serial embezzler is counting on. The second profile is the long-term employee. So this is the person who has been with you for a really long time, and one day they start stealing. The other statistic you should see is that on average, the embezzler gets away with it for almost 2 years before they get caught. And of anything that I'm showing you here, that one is the easiest one to address. And later on in my talk this morning, I'm going to give you some good concrete things that you can do that will help lower this one. So why do people steal? I think it's really simple. I break thieves into two categories called needy and greedy. And needy thieves are exactly what it sounds like. There is something going on in their life that's creating a financial imbalance. And it might be a divorce, it might be some kind of compulsive behavior like a drug addiction or gambling addiction or something like that. But for whatever reason, the household expenses are more than what's coming in. And they start by borrowing money from their friends and their parents and everybody they can. And once they've kind of exhausted that avenue, then they start stealing. But it's typically to put food on the table. The second group is a little bit different. If I had to summarize a large group of people in a sentence or two, what I would say is that these people feel underappreciated. They look at you, the dentist, as essentially a high-functioning moron with good hands. And in their eyes, the only reason you're financially successful is because they keep your chair full and they collect the money from the people who you treat. And they wait for you to come along and say to them, Susie, I've been so stupid. Starting tomorrow, I'm going to double your salary and I'm going to give you 30% ownership in the practice. For a while, they honestly think that's going to happen. And one day they have the realization that it's not, and all they're going to look forward to for the rest of their life is a cost of living kind of increase each year, and then they steal. And they're really doing it to make a statement to you that I am as smart as you, and it's only some kind of historical accident that makes you the dentist and me the office manager. What's interesting about these people is how they spend the money. And the picture on the screen is somebody named Misty Casanova from Texas. Misty took her dentist for over $350,000. And she would buy things like front row tickets at Beyonce concerts. I mean, think for a minute about what that costs. And of course, if you're sitting in the front row, you can't really take the bus to the concert. You have to hire the limo. Greedy people tend to spend their money conspicuously, as opposed to the needy ones who are really there to put food on their tables. So how do people steal? When I talk to dentists about embezzlement, what's in a lot of their minds is the theft of cash. And please don't take me out of context here. Embezzlers will happily steal cash, but they can also steal any other form of monetary transfer to you. For example, it is very easy for them to cash a check payable to you, or even steal a credit card payment, or an automatic funds transfer. So lots of different ways that I can steal. Also, let's break embezzlement into two categories. There's what I call outflow embezzlement, which means stealing on the expense side. So this could be tampering with payroll. It could be buying things on your office credit card. If you have a bonus plan in place, it could be somehow manipulating the numbers so that the bonus pays out when it shouldn't. It takes a lot of forms. And then there's inflow stealing, which is also known as theft of revenue, or the common name used sometimes is skimming. So now we're taking revenue that's coming into the practice. A question I get asked a lot is, should I put cameras in to cover my front desk? Will that help prevent embezzlement? And there's that prevent word again. A couple of things here. The first is a simple practical problem. Let's assume that your office is open 35 hours a week. And it requires 2 cameras to cover the front desk area properly. So now you're filming 70 hours of video each week. When are you going to watch it? And even if you sped it up 10 times, it would still take your entire Saturday each week to watch the video. Cameras are good when the time of an event can be pinpointed. So some offices have a problem with pilferage at the front desk. You know, somebody comes in with a lab case to deliver or something, and if they don't see anybody at the front desk, they'll steal something on the way out. Cameras are great for that kind of stuff. But when you're trying to watch your own employees who are in there 35 hours a week, not likely to work. There's a force in place that I think a lot of dentists assume will stop embezzlement. When patients pay money, they kind of expect 2 things. They expect to get a receipt from the person at your front desk, and they expect their balance to go down. On the other hand, you have dentists who check day-end reports, and their expectation is that the amount that was collected today will get deposited to the bank. And what everybody assumes is that those 2 forces in combination will keep people in line and stop them from stealing. Because of time constraints, and also for security, because this is an open forum and we can't really control who's listening, and one of my nightmares is that I say things that will teach embezzlers how to be better thieves. I'm not going to talk today about how embezzlers can do the embezzler's tango and defeat this control system. If you are interested, I'm going to put my email address up at the end, and you're free to contact me and have a private conversation, but we won't have any public discussion today of how they do it. What I will say now is that skimming is the dominant form of embezzlement in dentistry. In other words, we do see outflow embezzlement a little bit, but probably 80% of the cases that we work on involve theft of revenue. Just in the background on this slide, you'll see a confession that one of our suspects made, and it says to me a couple of things. I love what this lady says when she says, "I don't have a problem repaying you, but I'm asking you, please do not proceed with the investigation." The other thing she says is, "I don't know how much I stole, but it was under $500. In fact, it was more like $40,000. On average, when people confess, they confess to 1/6 of what they've actually done. Thieves tend to, first of all, lose track of how much money they steal, and secondly, they confess to what they think is the minimum that you would believe is reasonable. So whenever somebody confesses, we have to be a little bit skeptical as to what they do. And just to repeat something that I said earlier on, it's a lot easier to steal a check payable to you than most dentists realize. Most of you think that a check with your name on it is kind of inviolable and very difficult for somebody else to cash. And it's really easy, and it's something we see pretty much on a daily basis. So let's not assume that simply because people pay you by check, that money is safe. It uncategorically is not. So I'm going to give you a list of things that I think you should do daily, monthly, and sometimes. And the first one is really simple. Those reports that you look at the end of the day, and there should be a couple, but the biggest one is called in various software a day-end report, or sometimes a day sheet, that shows the total of your fees today and your collections, and of course the collections should add up to the bank deposit. Print that report yourself. There are probably some people in the audience who were hoping to make it through their whole careers without ever having to learn how to print reports in their software. I've got news for you. Software is not going away. As soon as you let somebody else print that report for you, what you create is the possibility of what's called selective reporting. In other words, you think you're looking at the whole practice, and in fact, you're not. If you print the report yourself, you can control the parameters and you can make sure that what you're looking at is what you should be seeing. The second thing with your day-end report is put your initials on it so that you know that that's the one you've seen, and then put it away and keep it for at least 3 years. Some types of fraud patterns result in a change, so that if you print the August 15th report today and then you go back 6 months later and you reprint the August 15th, 2017 report, they're different from each other. And the only way we can establish that is if you keep the original one. On a monthly basis, there are some things you should do. And the first one is one of the best tips anybody's ever going to give you about control of embezzlement. I'm going to assume that you have an alarm system on your office. If you're in the United States, HIPAA more or less requires it. If you're in Canada, the privacy legislation is a little bit different, but alarm is still a very good idea. So in 2017, the alarm companies are relatively automated. One of the things that they're able to do quite easily is to send you what's called an access log or an entry log every month. They can email this to you typically as a PDF file to your private email address, in other words, not one that the office has access to. So I'd like you to do two things. One is to make that happen, and the second is to take about 5 minutes to review that log to see if anybody is coming and going into your office at weird times. And I'm going to talk about symptoms of embezzlement in a minute, but one is people coming in when nobody else is around because they want to be alone to steal. Next thing, review your accounts receivable listing, and here's the important part. Pull out last month's listing and put them side by side and compare them. One of the characteristics of embezzlement sometimes is that accounts don't age properly. In other words, something will keep showing up in the 30-day column month after month, even though it's not being paid. And if you look at the two receivables lists side by side, you'll spot that. Some of you have probably looked at the audit log or audit trail in your practice management software, and what strikes everybody as soon as they look at this thing is how big it is. If you're a solo dentist, one hygienist, and you print this thing off for a year, it's probably about 3,000 pages. So using it as a monitoring device is a little bit daunting. What you may not know is there's a second report in your software, and the name varies a little bit depending on which software you use. And it's called something like a modified transactions report. And that shows where somebody has gone in and changed something. And that is inherently risky. So it's a good place to look, and probably more productive than looking at the audit trail. The next thing I want you to do is your bank and credit card, and if you're using patient financing like Care Credit or Lending Club, get those things sent to your house instead of the office. It will stop any kind of tampering with them on the part of your staff. What I like about this is it takes one phone call to do that, and it's done forever. And finally, a monthly monitoring spreadsheet that I'm not going to talk about, but it's something that I'll make available to anybody who emails me after this and asks for it. It's just a spreadsheet that does the math to make sure that the monthly totals and daily totals add up to each other properly. Three things that don't have a particular timetable. One is everybody in your office needs to take vacation. They need to be gone for 2 weeks each year when the office is open. That is a great chance to find out if somebody's stealing. I talked about hiring already, and we need to be skeptical when we hire. And we have this thing on our website called the Hall of Shame. If you haven't been there, you should check it out. And the final thing, and this is going to be the subject of a special offer today, is called the Embezzlement Risk Assessment Questionnaire, which normally costs $129, but it's yours today for nothing, thanks to your friends at Cirrus Group. Here's what I wish more dentists knew. There are a lot of ways to steal from you, but the way that people act when they're stealing is pretty predictable. The ADA did a study about a decade ago, and they asked dentists what tipped them off to embezzlement. They asked dentists who'd been embezzlement victims, what tipped them off. 2/3 of them said it was some kind of behavior on the part of the employees, and less than 1/3 said it was some kind of financial anomaly. So what I'd like you to do is to get better at assessing employee behavior. There are a lot of risk factors, but here are some of the big ones. And a couple of them I've mentioned already. Some staff want to be alone when they steal. Some don't want to take vacation. A very common thing among embezzlers is what's called territoriality, where they don't want to share their job with anybody, and also they don't want to cross-train anybody else to do their work. These people will resist the involvement of outside advisors. The embezzler is the person who says to you, no, you don't need to hire a consultant. I can help you. They will be seen cutting ethical corners, and at the same time, they will keep telling you repeatedly how honest they are. So those are some of the behaviors that we see among embezzlers. What I'm going to say to you today is if you send an email to that email address on the slide in front of you right now, request@dentalembezzlement.com, and you just have to mention the Cirrus webinar, we will send you a link to our embezzlement risk assessment questionnaire, which is something every dentist should do. Ladies and gentlemen, that was fast and furious, but I'd like to turn it over to Justin, who's going to talk to you about leasing.
David, thank you very much, and frankly, most enlightening. Very candidly, I know for many practices and doctors, frankly, for many of you, I know that this is an ongoing concern, and David is certainly an expert at the matter. So, I would certainly encourage everyone to take advantage of the opportunity to connect with David and his team, and if simply to have a conversation to maybe just to be precautious and ensure that embezzlement is not a concern within your practice. Certainly a tremendous value and a very generous offer by David. That being said, I do want to thank you all again very much for your time this morning. With respect to the second half of our presentation, we are going to discuss essentially the commercial real estate component of managing your practice, more specifically and particularly how to manage and mitigate risk in your practice by ensuring that you have a well-structured and properly negotiated lease agreement. And I do want to mention that this part of the webinar is specific for all of you who are either considering buying or building practices or opening new practices, but it's also very relevant for those of you who are currently in practice, who are lessees or essentially rent or lease space for your practice. It's also quite relevant for any of you this morning who may be considering retirement or transitioning out of dentistry in the next, call it 5 to 10 years or sooner. As many of you are likely aware, the lease agreement is very relevant to the sale and eventual acquisition of your practice. So we will cover off quite a bit over the next, call it 25 to 30 or so minutes. Just to provide you all with a little background on our firm, we have been in business for nearly 25 years now. As many of you may know, our firm essentially specializes very specifically in advising and representing dentists in commercial real estate matters. We are not realtors or brokers. Our firm is really more of a dental-specific law firm, consulting firm, professional services, and advisory firm. We have an in-house team of real estate attorneys. We have an in-house leasing team who are able to do research on rental rates and comparables to essentially determine whether or not the rental rates you are being offered or are currently paying are fair and reasonable and specifically in line with going rental rates for your particular area and property. And we have an in-house consulting team. Our consultants all come from a background in finance and business, and all three of our departments, our leasing, legal, and consulting departments, all work in parallel with one another and collaboratively to ensure that all of our clients are properly supported and properly advised. And I specifically am the Vice President of Healthcare Leasing, and I do manage our teams nationally, all legal, leasing, as well as consulting teams. On an annual basis, we will represent approximately 1,000 doctors in the negotiations of their office lease agreement. Our operations are all throughout North America. Our corporate head office is in Toronto. We do represent probably about 200 to 300 dentists and doctors throughout Canada, and roughly 600 to 700 doctors annually across the U.S. Every year, we will lecture at about 100 to 150 continuing education courses, similar to this morning's webinar, really with the intention of educating dentists why the lease agreement is relevant to the short and long-term success of the practice. And we are regularly invited to be keynote speakers at some of the large national and regional dental conferences and conventions. Every few years, we will speak at the Greater New York Dental Meeting. We will speak at the Pacific Dental Conference in British Columbia. We will speak at the Yankee Dental Conference in Boston, at the California Dental Association's annual meetings in Anaheim as well as San Francisco. We also lecture extensively at the Hinman in Atlanta. So we do lecture quite extensively all across the country, really with the intention of teaching dentists why the lease agreement is relevant to the success of the practice. Now, the purpose of today's webinar really is to talk about why the lease agreement is important to you as a practice owner. We will also outline and discuss some of the key terms and conditions within your lease agreement and discuss from a legal and liability standpoint why they are relevant to you as practice owners. And we will also discuss, at a high level, essentially how to negotiate or renegotiate the terms of your lease agreement. Now, I like to start off, just with a fairly generic question of what a lease agreement is. Now, I know from experience many of you likely have a fairly good grasp of what a lease agreement is. In essence, it's essentially an agreement between you as a lessee and your landlord, a lessor, that outlines the terms, responsibilities, and obligations of your tenancy. That being said, it also obviously is an agreement that has broader implications on you, your family, your estate, as well as your ability to eventually retire and sell the practice, which we will certainly discuss. But the reason that we put up a check is because for most dental practices, rent is one of the larger overhead costs for your business. Generally, it's one of the second or third biggest expenses. Usually the biggest expense is obviously staff wages. Then it's either lab expenses or your rent or occupancy expenses. Lab and rent expenses are usually interchangeable, whether it's the second or third biggest expense for your practice. And as many of you have likely experienced over the years you've been practicing, generally your rent tends to increase year over year, in addition to other expenses you may incur as a tenant, like maintenance fees, property taxes, insurance, and so on. And obviously, in some cases, those increases may be justified. They may be reasonable. In other cases, you unfortunately may be paying quite a bit more than you should be, which is part of course, what we will discuss this morning. But the reason we also put a check is because unbeknownst to most dentists, when you sign a lease agreement for the very first time, or when you signed a lease many years ago for the very first time, it is arguably one of the most expensive checks you will ever write in your entire life. For most practices, the average practice throughout North America, most solo practicing doctors will lease between 1,500 to 2,000 square feet. For most of you, your rent will be approximately $5,000 per month. Obviously, it's a pretty big range. It does depend largely on the location of your practice. If you are in, prime real estate in Manhattan or San Francisco, your rent is obviously going to be quite a bit more than if you're in a more rural, less saturated area from a real estate standpoint. However, if you think about it logically, many of you will pay, call it roughly $5,000 a month in rent. Many of you will practice for 25 to 30 years, sometimes longer, before you eventually retire and sell your practice. And if you think about it, if you calculate how much you pay in rent over the entire course of your career, for many of you, it is a seven-figure number. We are talking not thousands, but hundreds of thousands, in some cases, millions of dollars. And unfortunately, for many of you, when you signed your lease or when you sign a lease for the very first time, there are very few people that will advise you that the agreement you're signing is $1 million contract. I want all of you to keep that in mind because it's very relevant that you appreciate how valuable this agreement is and the type of expenses that it exposes you and your business to. Now, why is the lease agreement important to you? Well, first of all, the lease should provide you with long-term stability and security. Many of the doctors that we speak with will, when they initially sign the lease, agree to a 5, 7, or 10-year term or commitment, and generally there will be a renewal option that enables you to renew or extend the lease after the initial 5, 7, or 10 years expires. Following that period of time, many of you will simply extend the lease for 5-year periods of time. And unfortunately, that doesn't really afford you as a tenant with long-term stability and security because in many cases, the building may be sold, the property may be redeveloped. And if you are forced to pick up and move, as many of you know, it is awfully expensive and time-consuming to move a dental practice. So it's essential that the lease agreement you have for your practice provides you with long-term stability and security. And generally, what we recommend is structuring the lease agreement as a 10-year term with 2 5-year renewal options. So 10 plus 5 plus 5. The reason we recommend that is for a number of reasons. Number one, when you're negotiating a lease with any landlord, whether it's a sophisticated real estate group or real estate conglomerate, or it's a family-run and operated property, most building owners tend to be motivated by more long-term commitments with stable tenants like you as dentists, which means the more long-term the offer from you, the more leverage you have to negotiate better rental rates and better legal terms. But in addition to having more leverage in the negotiation, having a more long-term lease agreement will also provide you with long-term stability and security in your particular space and location. It will also actually enhance the ability for you to eventually sell your practice. Many doctors don't realize that when you sell a practice, the doctor taking over your practice does not simply negotiate a brand new lease with the building. And we will actually discuss this in more detail in a few moments. But generally what will happen is the doctor purchasing your practice will assume the obligations of your lease agreement. And the way that that occurs is you will need to transfer or assign the lease agreement from you, the seller, to the doctor purchasing your practice. Now, there is a formal process that you will go through with your building owner, and we will also discuss that. However, the reason I'm explaining this is because when you transfer the lease agreement from you, the seller, to the doctor taking over, there needs to be a minimum of 5 years left on the lease agreement in order for the bank to finance the acquisition. Banks, when they finance the purchase of a dental practice, understand that most dental practices are long-term, stable businesses that are cash flowing. In other words, they're profitable. But the banks also want to ensure that there is security and predictability, that when the doctor takes over the practice, they can continue to operate that business for X number of years and pay down the debt or the loan that has been provided to the purchaser. So essential that we have long-term stability and security in the lease, not only to protect you, but to enhance your ability to eventually sell the practice. Your lease agreement should also minimize risk and exposure. Many of you this morning are incorporated. And what I mean by that is you are operating your practice under a professional corporation or a limited liability company or a professional association or various other types of corporate entities that dentists will practice under. However, unfortunately for most of you, as it relates to your lease agreement, many of you have likely provided your landlord with a personal guarantee. A personal guarantee is incorporated into your lease in 2 ways. Either, first of all, you're not incorporated, and in that case, you likely would have signed the lease agreement personally, meaning that Justin Ditkofsky, for example, is the tenant, as opposed to Dr. Justin Ditkofsky Professional Corporation as the tenant. And if you sign a lease agreement personally, that implies a personal guarantee is provided. Alternatively, many of you may be incorporated. However, you may have provided your landlord with a guarantee when you took over the practice or opened your practice. And in many cases, the landlord likely explained to you that it is mandatory that every dentist provide, or every tenant for that matter, provide a personal guarantee if they're going to become a tenant in the property. Now, it's not unusual when you're taking over an existing practice or starting a practice from scratch, or opening any business from scratch for that matter, that building owners will require or request personal guarantees. However, the personal guarantees are negotiable. And just to kind of enlighten everyone, for those of you who are not entirely familiar with what a personal guarantee means, what a personal guarantee means is if there is a dispute, a legal dispute, between you and the landlord has the ability lawfully to pursue legal actions against you personally. They have the ability to go after the assets of you, your family, as well as your estate. So from a liability standpoint, certainly not ideal. Now, if you have signed your lease agreement and have already provided a personal guarantee, you can renegotiate that particular section of your lease and remove or limit the personal guarantee. For those of you who are currently operating under a lease agreement for your practice, generally speaking, when your lease agreement comes up for renewal or expires, which for many of you happens every couple of years or every 5 years or so, you can actually renegotiate terms with your landlord. And it's an opportune time to renegotiate the guarantee, if you have provided one, to minimize risk and exposure to you, your family, as well as your estate. Your lease agreement should also maximize your flexibility. Now, there are a number of ways to maximize flexibility in lease agreements. Number one, many dentists and doctors that we speak to regularly will tell us over time that they outgrow their space, that they started the practice and they leased 1,000 or 1,500 or 2,000 square feet or sometimes 2,500 or more, and over time, as the business continues to grow and scale, you need additional space to accommodate your growing business. Unfortunately, for many of you, you do not have incorporated into your lease agreement what is referred to as a right of first refusal, which is essentially an expansion option. What the right of first refusal will stipulate is if you as a tenant require more space to accommodate your business and a unit in the building becomes available for lease, the landlord is required contractually to offer you that space for lease before they would offer it to any other tenant in the building and before they would list the space publicly. So essentially, the right of first refusal is an option. It's not required, but it's an option that if you need additional space, you have the ability to take on additional space in the building, assuming it is available for lease. It's a wonderful option to have. It's a wonderful way to maximize flexibility in your practice. It's also something that is quite appealing to a purchaser when you sell your practice. The other way to maximize flexibility and also, frankly, minimize risk is every one of you should have incorporated into your lease agreement what is called a death and disability clause. Now, it sounds morbid. I assure you it's not. Essentially, what a death and disability clause does is it provides protection for your family and your estate. God forbid you pass away, or God forbid you're disabled or incapacitated beyond a point that you can continue to practice dentistry. And essentially, what the death and disability clause will stipulate is God forbid something happens to you, you get sick, you pass away, you're disabled and can no longer practice dentistry. Your estate will have the ability to terminate the lease agreement if need be and not be required to continue paying rent for X number of years. It acts almost like an insurance policy that protects your family and your estate forever. However, you don't pay any premiums for it. Lastly, you do want your lease agreement to provide you with fair and affordable financial terms. And I know for many of you that may be a sensitive topic. I know regularly some of the doctors and clients that we speak with have concerns about their rental rates. And from experience, unfortunately, many of you are in fact paying more than you should be. So we always do recommend that if your lease agreement is coming up for renewal or expiring, any time within 2 or 3 years, or if you are signing a new lease agreement, it's a wonderful time for us to take a look at the agreement. Our leasing team can do some research on rental rates and comparables, and we can advise you whether or not your rental rates are fair and reasonable and affordable, but also in line with rental rates for your particular area. Now, if you have all of the above, what your lease will do is your lease will start to function more as an asset as opposed to a liability. Now, for those of you who are thinking of buying or selling a practice, there are really three key variables that will factor into the valuation of your business. First and foremost, of course, is goodwill, the value of your patients, charts, etc. Now, there's no simple way to describe how goodwill is appraised. Essentially, what it'll come down to is how much is your practice grossing year over year? Is the practice growing, or is it flat, or is it declining? How many new patients are you attracting on a weekly, monthly, and annualized basis? What are the net profits of the practice? And a practice broker or an accountant is going to give you a valuation of the value of goodwill. In addition to the value of goodwill is going to be the value of equipment. Now, what I mean by that is how much is your equipment worth today, not how much did you purchase it for. And you will have a practice broker or accountant determine the depreciated value of your equipment. In other words, how much is it now worth today? That being said, the nicer, more modern your equipment, the higher the valuation. But that being said, when a doctor purchases a dental practice, they're not just buying goodwill, and they're not just buying the equipment or a combination of both. What they're buying is they're buying a stable, profitable, cash-flowing business. And the only way to assume or take over that business is to also take over the location, the office, and the facility itself, with the goodwill, the equipment, the staff, and everything in between. And the only way to sell all three of these variables is to transfer the lease agreement and essentially your control as a tenant over the space, location, and facility itself to the new doctor taking over. In order for that to happen, we need to go through a very formal process with the building owner or property management group, which we will discuss in a few moments. Unfortunately, it's not always a very straightforward process. And in some cases, landlords will tend to overcomplicate that process for self-motivated reasons. Sometimes to try to change the rental rates and charge the new incoming tenant or the purchaser more rent than what you currently pay. And more often than not, we actually have encountered many cases where landlords will actually ask the seller for a % of proceeds from the sale of the practice in order to allow the transfer of the lease. So we will talk about how to avoid those scenarios, how to protect you and your practice and make sure the lease is transferable and sellable. But it's important that you understand that the lease agreement can impact the valuation of your practice and can actually determine not 50%, as you see in the diagram before you, but the lease agreement can actually dictate as much as 100% of the valuation of your business. Now, what's in your lease agreement? So we talked earlier that generally many of you will sign a 5 or 10-year lease agreement and with a renewal option. The clause you see before you is an option to renew clause. This is the clause in the lease agreement that enables you to renew the lease agreement after the initial term or subsequent term you're currently operating under expires. Now, there are a number of issues for many of you in your lease agreement in the option to renew clause. In fact, we're going to go through a number of the issues that are commonly found. Unfortunately, 90% of you this morning will have a very similar option to renew clause in your lease agreement, and it could have very broad implications on the short-term and long-term success of the practice. First and foremost, it will generally stipulate that, provided that Dr. Joe Black shall remain as the tenant. What this essentially implies is that the renewal option is non-transferable. It is actually personal to Dr. Joe Black. Now, some of you may notice in your lease agreement it will specifically mention you, that the renewal option is personal to you. In other cases, it'll simply say the tenant, but as you'll notice here highlighted in red, the word tenant is capitalized. And for many of you, it'll say the tenant, capital T for the word tenant, shall have 2 5-year renewal options or 1 5-year renewal option. The reason that the word tenant is capitalized is because it is actually a defined term. If you look at the very beginning of your lease agreement, you will notice that it stipulates this is an agreement between so-and-so, in brackets landlord, capital L, and so-and-so, hereinafter referred to as tenant, capital T. On the very first page of the lease, the word tenant is actually defined as you or a corporate entity. What it stipulates when it says in your lease, the tenant shall have, and again, capital T when we talk about tenant, shall have the renewal options. What it's saying is those renewal options are personal to the tenant and non-transferable. And while that may not seem like a major issue, unfortunately, it is a major issue for any of you who are considering selling your practices anytime in the future. Because as I mentioned earlier, in order to sell your practice and in order for a prospective buyer to secure financing, they need to have 5 years on the lease. And if the renewal options are non-transferable, it could pose challenges for the buyer to secure the necessary financing they need to purchase your practice. So we do want to ensure the renewal options are transferable. It goes on to say that you will have the ability to renew the lease so long as you are not in default. You'll notice that the word default here is also capitalized. Similar to the word tenant, it is also defined in your lease agreement. Now, a lot of people will assume default simply means as long as you're paying your rent, you are not in default of your lease. I would encourage all of you to take a look at the default section of your lease. It's usually 1 to 2 pages long. And if you do not fulfill any of those obligations or all of them, you are considered a material default of your lease. Now, to give you, just share a recent case we worked on a case recently in McLean, Virginia. And general dentists have been practicing in their space for 15-ish years. Had some ongoing issues with the landlord, but nothing major, generally maintenance and repair related. And after 10, 15 years in business, the landlord advised her that they would not be renewing her lease agreement. Now, mind you, she had a 5-year renewal option signed and agreed to in her lease at the time. The landlord advised her, regardless of the renewal option, they would not be renewing the lease because she was in default of her lease. When we eventually got involved in this particular case, what we uncovered very quickly is the landlord was arguing she had been in default of her lease consistently and habitually because she is not open for business 5 days a week. In her business, she was essentially open 4 days a week, and there was a stipulation in her lease. She is in a strip mall, so for many of you in strip malls, there are required business hours. And per the terms of her lease, the minimum required business hours were Monday to Friday from 8 a.m. to 5 p.m. So it may not seem obvious whether you're in default or not, but I would encourage everyone to review the default section of your lease, because if you are ever in default, whether it's paying rent or other obligations, the landlord is not required to renew your lease. Now, it goes on to say that you will have the ability to renew the lease for another period of 5 more years. You do need to provide the landlord with 9 months' notice. However, the renewal will be on the landlord's current standard form lease. What that essentially implies is, during a renewal, the landlord has the right to ask you to sign an entirely brand new lease agreement. It's further stipulated that it will be at a minimum rent determined between landlord and tenant, but regardless, in no event will the rent be less than the rent paid in the last year of the original term. In other words, regardless of the economy, your rent is going to go up year over year, as I'm sure many of you have experienced. And it goes on to say that if you and the landlord are unable to agree on a rental rate, you do have the ability to go through arbitration, meaning you hire an arbitrator and they hire an arbitrator. However, the arbitration will be based on the market rent for renewing tenants in the building. In other words, it doesn't make a difference what everyone in the area is paying. What matters is only specifically what people in your building are paying, which poses a whole long list of challenges for you if you want to negotiate better rental rates with your building. Now, the other clause that's relevant for many of you is the assignment section of your lease agreement. The assignment section of your lease is the provision in your lease that enables you to transfer the lease agreement in the interest of selling your business. Assignment in the real estate world is synonymous with transfer of lease agreement. There are, in many leases, again, we represent about $1,000 a year. We will review and analyze, probably closer to 2,000 leases a year for doctors across both Canada and the U.S. And unfortunately, 75% of the leases that we review have the exact same issues we are about to go through. Now, what you'll notice is in every single lease, if you want to transfer or assign your lease agreement, you do need the landlord's permission or consent. Now, in some cases, it'll be stipulated that their consent will not be unreasonably withheld. However, generally, they do not put in language saying that the consent will not be unreasonably withheld, delayed, or conditioned. The condition part is very relevant because, as I mentioned earlier, landlords are notorious for incorporating conditions into their approval. In other words, you request their consent to an assignment or transfer of your lease, and they provide you with the consent conditional on a new rental rate, or in some cases, some type of monetary compensation to them. So we do want to ensure that it is very clearly outlined if we want to sell our business and transfer the lease, as long as the following conditions are met, the landlord cannot prevent or withhold consent to a transfer of your lease agreement. We worked on a case a little under a year ago, probably about 10 or 11 months ago, in Burlingame, California, just outside of San Francisco. And general dentist had been practicing in this location for about 30 some odd years. Unfortunately, for various health issues, she was forced into selling her practice a little bit prematurely. This is also a very successful multi-million-dollar practice. And unfortunately, when she approached the landlord to request approval to transfer the lease from her to the doctor that she had a conditional agreement of purchase and sale with, who essentially would be taking over her practice, the landlord advised her that they would essentially provide her with three different options. Option number one is they would agree to the transfer of the lease agreement, predicated or conditional on a 35% increase in rent. Her rent at the time, by the way, was about $9,000 a month. So the landlord was essentially proposing that her rent go to about $12,500 a month if she wanted their consent. Obviously, that would be a major issue for the buyer and would devalue the practice significantly. The second option was no increase in rent, so long as she agreed to pay the landlord 50%, 50% of the proceeds from the sale of her practice. Her practice was, the agreed upon price was $1.8 million. So the landlord was essentially requesting $900,000 to simply allow the transfer of the lease. The third option was if she did not agree to either option 1 or 2, within 2 weeks, the landlord would be providing her with a 30-day termination notice, essentially evicting her from the property. Now, I will tell you very candidly, most landlords do not care to prevent you from selling your practice, and they certainly do not want you to leave their buildings. But many landlords are sophisticated, savvy business people. And if there is an opportunity to make money, that is exactly why they went into the real estate game. And we deal with these cases regularly, usually not as extreme as the case that we worked on last year in Burlingame, but on a regular basis, I would say daily, multiple times on a weekly basis, we are involved in less extreme cases where the landlord is conditioning their approval to a transfer of your lease agreement predicated on for example, a 10% increase in rent or 1 or 2 or 3% of the proceeds from the sale of your business. And 10, 15 years ago, that did not happen. 10 years ago is when it started to we started to notice that in the real estate world. Nowadays, I would say we deal with a few hundred cases a year where landlords are conditioning approvals for transfers of lease agreement to ask for money from the doctor selling the practice. Now, they're able to do that because for many of you, in the assignment clause, it'll stipulate that when you request approval, the landlord not only has the right to increase your rent, but they also have the right to terminate your lease if you do not agree to their terms. 75% of you this morning will have that in your lease. It also is further stipulated that even if the landlord does approve a transfer of your lease, you as the selling party or the transferor will remain primarily liable for the new doctor who has taken over your business. In other words, you will remain a guarantor for the new doctor who takes over your business. So essential that the assignment and subletting section is properly structured. Even if you do not plan on selling your practice for many years, it's essential this part of the agreement is properly structured. Now, in the interest of time, we only had the opportunity to discuss 2 sections of your lease. We didn't get to discuss relocation clauses that enable landlords to relocate you to different units in the building. We didn't get a chance to discuss termination rights or financial statements or redevelopment clauses that many of you will have if you're in major cities across North America. again, essential that the lease agreement is properly structured. Now, in a minute or so, we're going to wrap. I do apologize. We're going a little over time here. For those of you who currently rent your space and have your lease agreement expiring or coming up for renewal in the next 1 or 2 years, we do highly recommend that you begin negotiations with your landlord preferably 2 years before the lease expires. The reason we recommend starting the process 2 years out is because as a dentist, if you were to pick up and relocate your practice, it's usually a year-long process, and most landlords are aware of that. So the earlier you start the negotiations, the more leverage you will have in the negotiations with your landlord. So we do recommend, it's arguably one of the more important things you will learn this morning, start the negotiation process 2 years out. Now, in terms of actually how to negotiate the lease, this is the 7-step process that we follow. In a minute or so, just to quickly walk you through this. When we get involved in these projects, in every case, it starts with, we want to get a copy of your lease. We need to identify what are the goals for you, your practice, etc. Your lease agreement then needs to be reviewed thoroughly by our team of real estate attorneys to determine, are there any onerous terms or conditions that should be revised or amended? We will then start to have our leasing team do research on rental rates and comparables to determine whether or not you're overpaying in rent and what rental rates we should propose moving forward. The 5th step of the process, we will generally have a conference call or a meeting with the client to discuss strategy before we contact the landlord. You'll notice, by the way, that we've completed 5 of 8 steps of the process. We have not yet contacted the landlord. It is essential that you prepare for the negotiations properly. Otherwise, I can assure you from experience, you will likely lose. Once we eventually start the negotiations, we will start the conversation off with the landlord about the financial parts of the lease agreement. We will negotiate the rental rates, maintenance charges, tenant improvement allowances if you want to renovate your office. All of the financial parts of the negotiations are negotiated initially, and why? Because that's what landlords want to talk about. Landlords do not want to talk about legal terms and liabilities. They want to talk about money and cash, because that is frankly what motivates them. We will generally spend weeks, on average about 6 to 8 weeks, simply negotiating the economic parts of the deal. Once the financial and economic terms are agreed to, we will then negotiate legal. This is where we negotiate personal guarantees, assignment clauses, options to renew, relocation clauses, redevelopment clauses. There is a long list of legal items that need to be incorporated into the lease to protect you and your business. And finally, once all the financial and legal parts have been negotiated, we will then review the final version of the lease agreement before you sign it or before a new lease is consummated. It's essential that everything is reviewed at the very end, because in many cases, the final version that we review is inconsistent with what was actually negotiated over the month of back and forth negotiation. It is a fairly time-consuming process, which is again why we recommend you start the process ideally 2 years before your lease expires. Now, for those of you who currently rent your space and do want to potentially have us take a look at your lease agreement, one of the services we provide is a critical dates and risk analysis. It is essentially a review of your lease agreement. It is all done by phone. It's usually about a 1-hour conference call. We will get a copy of your lease beforehand, either by fax or email, or we will get you to mail us a copy of your lease. Our legal team will review everything cover to cover. Our leasing team will take a look at your rental rates and the comparable rental rates in the area. And we will then get on a call with you for about an hour to walk you through what needs to be changed, what needs to be negotiated, and how to do it. We normally charge a $1,500 fee for this service. However, for all of you this morning who have taken time out of your day to join us on the webinar, the lease review service is completely free. So if you are interested in having us take a look at your lease, there's no cost, there's no commitment. We are more than happy to take a look at your lease agreement completely free of charge. If you are interested in taking advantage of the complimentary lease review offer, please take my details down. My direct extension and my email are there. You can also just email info@cirrusconsultinggroup.com and just reference that you had attended today's webinar, and we will very happily provide you with a complimentary review of your office lease agreement. That being said, again, I do want you to take advantage of the opportunity to either have your lease reviewed or connect with David to talk about essentially prevention and ensuring there's no embezzlement within your practice. In fact, encourage all of you to take advantage of both consultations. Mine and David's contact details are there, so again, please do feel free to reach out to both of us. We are certainly very happy to help you. And with that being said, doctors, I do want to thank all of you very much for your time this morning. I hope today's webinar has been enlightening and educational. I know that both David and I have covered off quite a bit over the last hour or so, and we are certainly here to field any questions you may have. I know a number of you have put in questions in the Q&A field, but we are here to help you. So if you have questions, please do not hesitate to contact both David and myself. If you are interested in the consultations, please just email us. And again, doctors, we do want to thank you for your time. And David, do want to thank you very much for your time.